I'm Eric Moraczewski, the CEO of Nimble Strategies and the court-appointed successor receiver over CannaVer LLC. CannaVer LLC was established in 2019 with the idea that they would be bidding on licenses that would operate in the cannabis world in the state of Missouri. It was an organization that had a little bit of experience in the state of Colorado, and so they were moving that over to Missouri to try to take advantage of the limited license state that existed as a part of the process in Missouri. In doing so, they bid on 8 licenses that were 3 grow licenses, 3 manufacturing licenses, and 2 retail licenses. From the state, they were awarded 3 licenses, but those 3 licenses were all manufacturing licenses. And so they started out trying to really develop products that were unique and special to Missouri. One of their favorites was their gooey butter cake, which was an option that was a THC infused gooey butter cake, very different than what else is on the market, but also one of their ultimate downfalls was they were going for unique products which were not typically what people were purchasing. In the edible space, about 90% of purchases relate to the gummies, and that's really what makes up such a large portion of the edible space. And so I think ultimately what ended up putting this company into receivership was their lack of true understanding of the market. There are not as many options available to cannabis companies. You can't enter a federal insolvency action because cannabis is federally illegal. And so you have to go through some form of a state court process to do any form of wind down. In this case, the company itself put itself into receivership. And so some of the investors put it in an effort to make sure that it could be wound down in an appropriate manner. It's not necessarily an easy process to go through to wind down a cannabis company and also not lose your licenses at the same time. That was always a concern for the investors, is if there was going to be any value in the sale of the business, it had to come through the sale of the licenses. And so they needed a court protected process that would allow them to move this through efficiently. Really the key aspect of the order of appointment is ensuring that we're operating the process efficiently through the Department of Health and Senior Services, which in the state of Missouri is who manages the cannabis license process. Ultimately, what they were wanting us to do was to make sure that we could sell the licenses and the assets of the entity in a way that did not conflict with DHSS approval, as well as ensuring that we did not do anything that required DHSS or encouraged DHSS to remove the licenses from CannaVer. While the company was operational for about 18 months, it really didn't have much in sales. In its total existence, it sold about $120,000. So it was a company that was not operating efficiently in a market that was growing. In fact, Missouri was the fastest state to hit $1 billion in recreational cannabis sales of any state in the country, including California, including Colorado. And so it was a huge market for a variety of reasons, but they were operating so inefficiently and missing their opportunities that they needed to be hitting. So we really had to look at this as truly just a liquidation process, because they did have some valuable assets. Unlike states that are open license states, meaning that they can, as long as you go and apply for your license, you can get a new license at any point, similar to Colorado or the state of Washington. In Missouri, it's a limited license state, so there are no new licenses available. The value then of the business becomes those licenses and the equipment that you've purchased and the facilities that you might have. But it doesn't mean that someone who had gone through all those processes had operated efficiently. And so we really did see that there was really only one path forward, which was the liquidation of all the assets of the business. We were in a little bit of a unique space in that there was a receiver initially appointed. He actually developed some health issues and had to step aside, and so we were the successor receiver. So he had actually somewhat laid that ground that allowed people to understand the receivership process was going on, and probably had to deal with a little bit more of the harder understanding questions that came up first. So we stepped into an area that our real focus was people are aware the receivership was going on, people are aware of what the assets are. Someone just needs to get this sold quickly and efficiently, and that was where we really did a strong job of coming in, getting that sold, getting the assets liquidated, and going through that process with the state, with the Department of Health and Senior Services, to make sure that we were doing it in the correct manner and the approved manner. Now, during that time, we had some things come up that were a little bit unique. We did have to destroy about 3,000 vape pens that the state determined were expired, and so we went out to the facility with a hammer and literally destroyed them physically, which was a little bit of an interesting process. So we've had some unique things come up during this process that you don't see in every receivership, but has been educational as we go through it. So our big stabilization when we're going through a liquidation process and selling the licenses and the equipment is to make sure that all the assets remain intact and available. So the big thing there is making sure that you're very communicative with the state and making sure that they're not seeing anything that makes them feel like they should revoke the licenses. That was really probably our biggest role in making sure that we were stabilizing the entity. The other one then comes with the facility itself and making sure obviously that it's secure and not getting broken into, especially when you don't have people there on a regular basis other than when you're giving tours to potential buyers. You want to really make sure that no one is coming in and stealing or breaking in and causing harm to the facility. And so we did make sure that there was regular engagement going out to the facility, but we also made sure that the landscaping was kept up and made it, even though there weren't many cars in the parking lot at regular times, we did want to make sure that there was the appearance that it was being taken care of. The initial receiver actually sold one of the 3 manufacturing licenses, and that was very helpful to get us through to our process from a funding standpoint. So it did allow us to take on cash that could be utilized to fund the receivership. During that time though, then we did operate our process and we did move fairly quickly from a May appointment to accepted a bid in August of that year to sell those assets. So we did move through that quickly. The closing process obviously takes a lot longer because you have to go through a DHSS approval process for that new buyer and for that transition of licenses. That did take a while, but because we had sold those assets and because we were continuing to move things through, it allowed us to have cash on hand to stay operational in the receivership, obviously not operational in the entity. With that said, we did employ a few tactics that did allow us to bring in other funds into the receivership. One of the more unique ones was we did work with DHSS and the buyer to get them operational prior to the licenses being transferred, and what that looked like was essentially a management agreement with them to manage and operate the facility under our name and our license. And so the state was open to that and allowed us to do that, which allowed us then to generate some revenues while we were going through that process. There were actually 2 processes that we employed for selling the assets. Initially, when we came in, there was an offer on the table that the initial receiver was ready to present to the courts, which was the purchase of everything for about $2.4 million. We saw that that was actually a value that was well below the value of the assets that were there, and so we did not actually file that sale with the courts. What we did instead was we relisted and marketed the process to a broader audience, and in doing so we received an offer of about $2.75 million for the majority of the assets. One thing that we held back that was in the initial purchase price but was not in that second offer, intentionally we left this out, was the appeal rights for the 5 licenses that we did not get when they were going through the initial process as CannaVer. Those appeal rights were unique in the cannabis space and especially unique to the state of Missouri because CannaVer had bid on licenses and had received a score that was in line with other groups that were receiving licenses, or had an argument to be made that they deserved certain points that they did not receive. They had an appeal going on with the state of Missouri. Those appeals in some cases early on resulted in the awarding of new licenses for those groups that won their appeals. But what was the most common tactic was people aggregating enough licenses that the state then went back and said, okay, we will give you an awarded license, aggregating 25 or 50 appeals together. We had very strong appeals because the state had ranked everything and shown that we were in those top 3, top 5, kind of next up. And in doing so, we had some interest from people to purchase those licenses. Ultimately, we sold our 5 appeals for likely well above market rate for other people selling appeals, and we sold those appeals for $1.1 million. So we took what had been a $2.4 million offer and turned that into $3.85 million, which ultimately benefits the secured and unsecured creditors significantly. So we paid the secured creditors their secured creditor amount. The secured creditors in this case are a credit union in Missouri. They have both secured and unsecured claims. So we paid out their secured claims as well as we paid the IRS and the state of Missouri for the tax claims that they had. Fortunately, both of them were willing and able to file claims, which made our life a little easier, that we were able to address that directly with them and make sure that we had the amounts that they determined to be correct. And now we're going through this process, working through the unsecured claims. What makes this even more difficult is the entity owns 40% of the real estate that they existed in. Not 100%, so we don't have complete rights towards everything. And there is an ongoing case relating to prioritization in the property case. Through our sale process, we sold the building for $1 million. That $1 million has been set aside to go to a waterfall based on the prioritization that the other case is determining. And so it's created a scenario where one of those 2 claimants has security interest in CannaVer, one of them does not. And so depending on who actually is determined to be the higher priority in the other case has a dramatic impact on our payout schedule to our claimants in the CannaVer case. So it's been very interesting, it's been very complex to try to determine exactly how much will get paid out to everyone. While we've gone through this process, one of the things we did was we worked with our local bank to make sure that we were in a high interest account for the money that's set aside for the unsecured creditors. And so at least while we've waited for all of this to play out, we've been actually growing the pot of money as opposed to reducing that pot of money during that period of time. Some of the challenges that existed in the case were the process of transfer of licenses. And so while the state and Department of Health and Senior Services has been very helpful as we went through this process, it's still very time consuming. And ultimately, as a receiver, our goal is to get in and get out. And our goal is to do the best job possible in a shorter period of time. And this case has dragged out for several years now, partially because there was the transition from an initial receiver to us as the successor receiver, partially because the license transfer time periods, and then there were some other issues that came up along the way. Fortunately, the Department of Health and Senior Services, partway through our case, revised their guidelines, and what was taking about 18 to 24 months for license transfers to be approved, but was shortened to a maximum of 180 days. And so that did shorten some of those time periods for review as we went through license transfers. But it still was taking every bit of that time period to get things done, and so that we could get this closed and ultimately wrap up the case. We've set a hearing for just a couple weeks from now that should wrap up the case. We are going through mediation right now with the 2 parties that are basically our last holdouts in getting this closed out. And so we hope that this mediation will be successful, and ultimately in 2 weeks we can go to the courts and get the approval to pay out every one of our unsecured creditors to the fullest extent possible and file our final tax returns and close out the case. With CannaVer, we've had a number of challenges that have come up along the way, and we've been fortunate that we've been able to work with great counsel. Emily Cantwell of Lathrop has just done a fantastic job of addressing everyone's issues along the way, of challenging parties coming into the case and always being able to handle them. There are times where you want to push back, and there are times where you feel like you should just concede issues, and she's really been our strategic advisor through that whole process and allowed us to make sure that we're making the best call at each moment along the way. Ultimately, I think what happens in cannabis cases is there are not as many opportunities, such as bankruptcy, for them to shut down or to restructure. And so getting someone in that has an understanding of a cannabis scenario and how that process plays out, not necessarily because they have to know how to manufacture or grow or distribute, but mainly they have to understand how to work with the state through a sales process, because you can find those people that can operate the facilities for you, and you can find really good people that you can contract to come in and help and give you guidance along the operational side. But knowing how to work through the process with the state, especially in Missouri, just because we are a limited license state, there are not new licenses being issued, really becomes beneficial to trying to make this process as efficient as possible.